To get started. First, I'd like to ask what do you feel currently is the impact of DeFi on traditional finance? I'm going to just make sure, does everybody here understand what DeFi is? Yes, okay. So why don't I start with you, Joe?
Yeah, so we were just joking about this. So if you went to a conference for the last 8 years, the panelists would get up there and say, "Oh, you guys are going to be out of business because the blockchain is going to disintermediate everyone." But I actually think we're just about on the precipice of it actually happening right now, and it's moving from a space that's it's actually still very small. The total crypto world is less than the Apple shares. So it's moving into the institutional space where people are taking it seriously. And if they're not taking it seriously, their investors are taking it seriously and pushing them into that space. So it's happening at this point in time. That's very macro, but please.
Thomas, your thoughts?
Yeah, I think about 10 years ago we saw the trends of like financial technology and fintech companies coming, right? And like the whole TradFi and banking industry felt very afraid from it. In the end, what did they do? They provided us better UI, better UX, quicker shipping of product features, better customer service. Like most of those companies got acquired by the banks started to copy that, and the rails that they were building on, it's still the same Swift system, DTCC system, and I feel with DeFi, for the first time, the banks are really being pushed by totally rethink their models, because we're changing the rails. We're starting to think about a global financial system, fully digital, fully programmable, beyond just the user experience, but really at the core of what is happening on the engagement and economical levels. And I feel it's really pushing the banks to think about, okay, what are we gonna do with this?
Well, I think that JP Morgan is a good use case to show us that traditional bank that is, sorry, you all hear me? Okay, so I think that JP Morgan, the bank, the largest bank in the US, is a very good use case for a bank, a traditional bank, that is already been thinking, I think, since 2015 about the impact that blockchain technology can do in the financial system and more than that. They've been starting, experimenting with that for, as I said, since 2015. And in December of 2020, they just launched, this division called Onyx, and they moved all the projects that they had on blockchain, including Quorum, which is their blockchain that is built on Ethereum, the private one, and they made it kind of official that they were going to do all this blockchain technology. And I think that something to mention, they just came up with a report also in February about DeFi, metaverse, and all of that. And they, at the same time, they bought a virtual parcel on Decentraland. And in their vision that they preparing themselves to have a virtual launch, to do all kinds of virtual transaction. And they were talking about DeFi, that whatever we know today, like the borrowing, the lending, the bank, whatever we do here in the traditional system, that will be on the metaverse through DeFi. And they talked about it. And this is a traditional bank. It cannot be more traditional than JP Morgan. And if they're talking about it, and they're writing reports, and they're even building now applications of that, then I don't know what is more of DeFi becoming mainstream. So that's my take on it.
I think your thoughts.
Yeah, look, I think what's really fascinating to me is, given that for the people who don't know, I came from traditional finance. After 15 years in fixed income markets, really what you see here is the concept of programmable money, right? Which is something that DeFi is bringing to the table. So the fact that you can have an application where you're on top of the mainnet or to do some things that I think in finance, traditional finance, we haven't done really. So all these applications, whether it's lending or investment management, there is a massive potential to basically take all of that to DeFi. The part that is missing is just the regulatory component.
Well, it's coming.
It's coming, and once you have that in place, then you're going to see a lot more things taking place, right? And that's missing. So regulatory component is missing, and also the scalability component, which is what Ethereum is going through right now. So then you're going to get the speed, and you're going to get the regulatory component. And once you have these pieces, this should be asset class that is going to be something that you see of size in traditional finance. Something like, think about DeFi right now. I'm excluding metaverse and some of the NFT components, but it's about 200 billion total value locked, right? So put it in the context versus the traditional fixed income markets that, depending how you count it, it's like, it's peanuts, right? So even if it goes 5 times from here, which likely is still going to be a small component of the overall global markets. So this is where we sit right now. You need these 2 components to kind of, from a macro standpoint, which is the regulatory component, work that out, and then increase the throughput of the speed, like Ethereum 2, for instance, is going to increase the speed. Once you have that, then there is no reason why you should see a lot more acceleration in the asset class.
But you don't have to go with Ethereum. I mean, Algorand is perfectly better than Ethereum. You have so many other platforms. I don't know, people are stuck with Ethereum as if this is the only platform. It's not.
But you need scale from a liquidity perspective. Like a JP Morgan is not, or an Apollo or a KKR is not interested in deploying 100 million in these pools, right? They want to be able to deploy 10 billion.
Yeah.
But then you're 10% of the AUM of what it is today.
Yeah.
So we need that scale to be able to get those institutions in.
And coming from the institutional world, I'm pessimistic. I'd be interested in your thought on them actually building anything just in the space, or there'll be acquirers in 5 years of smarter people who are building it right now. That's my personal opinion.
That's the history, but that's the
It
history.
depends.
Yeah.
Sorry.
No, but that's the history,
Yeah.
is that, when you think back on trading, when it was electronic trading,
Yeah.
high frequency trading, the big banks all bought these
Yeah.
smaller companies.
Yeah.
But I wanted to get back to Ivan's point about the regulatory issues, and especially what happened yesterday with Biden's statement and all of that. What do how is that going to impact all of this?
I'm very optimistic. I mean, I think that the approach that Biden is taking is very positive. The fact that he's taking a holistic approach, that he's not assigning it to one department or one office, is already a good sign. That he understands that it's not going to be just payment, that's OCC or just this, or just this, or just that, because it's not. It's a lot of things, and we have to collaborate with all kinds of departments in order to make it happen. So that approach is already a good sign. What will come out of it, I mean, we have to come and see, but at least the approach is a good sign. So that makes me optimistic that at least they will come up with some good suggestions and recommendations, and we'll see what happens.
Your thoughts?
Yeah, I think it's a positive sign. If you kind of compare the U.S. policy versus, say, China policy, right?
Oh God.
China has been very restrictive in regards to crypto in general, right? I mean, I think part of the reason is because they have been pushing for the digital currency, and they don't want to basically have a bunch of DeFi protocols with their own currency. Here in the US, actually, I view Bitcoin as well mining. As you know, now there are mining companies across Texas. It's like US is, I think, expanding in Bitcoin mining versus, say, 2 years ago. Right?
Yeah.
So what you're seeing is actually US policy kind of reminds me of early internet kind of development, right? The US took this kind of very proactive response to some of these developments, right? And if you remember, in the 1990s, people were talking about, we're going to buy things online, we're going to do things online, right?
Yeah.
So US is taking that, I would say, they see this technology could change things, right? And if they incorporate the CBDC within some settlement layer, whether that's Ethereum, whether that's some other base layer, right? But let's say they incorporate CBD, CBD, that's like home run, right? Because then you have basically just upgraded technology. You still preserve the reserve currency, which is a dollar, and I think I view the whole thing is very positive, and so they see the value in the technology.
Right.
The problem is that I do not think there are too many experts when it comes to DeFi from a legal standpoint. How, by the time they get there, by the time they get to kind of understanding, the things like counterparty credit risk, smart contract risk, all of that in DeFi, it's going to take some time, before they resolve that.
I know a few in DC.
Sorry?
I know a few in DC. I mean, they are rare, but there are a few.
There are a few, like,
Few.
not, they
Yeah, not
upgrading
hundred, I mean.
they're upgrading the resources from what I understood. They're hiring more people in
Yeah.
that, section like DeFi, understanding smart contract risk.
Yeah, but,
So what do you think is going to be the biggest, besides the understanding, the hurdle to really take it to the next level?
From a regulatory perspective, there's a lot of institutions out there in the crypto world that say, don't worry about it today, let's not ask permission, and we'll just do it, and we'll worry about that later. So they're going to be disintermediated, and the firms that embrace the regulatory environment, whether it's in the U.S., I think Germany has a pretty good regulatory environment around this, as does Singapore. Those firms that domicile in those jurisdictions and embrace that regulatory environment, that would be the big differentiator. The other guys, the U.S., all these jurisdictions are not going to tolerate some of the stuff that goes on today.
Yeah, and I think as an industry, we have a responsibility to support in education. I think what some of the big ones are doing, like Coinbase and FTX, they're setting up these lobby groups, they're working together with the regulators, and it is needed, because I think a very interesting point, as you said, is like smart contract risk. It's something very different. In like permissionless DeFi, you don't have credit risk, you don't have counterparty risk. You need to start looking at the underlying technology. And it's a total different way of regulating it. And so we need to bring experts in there, create those experts, but do it together with them. Because otherwise, we need to regulate this quickly enough, but like keep it pretty open and flexible.
I mean, do you think that they are so nimble that they will, that it will happen quickly? Or do you think, this is the first step, but as you know, things in government get bogged down?
Yeah, and I think the internet is a good comparison, right? The conversations are started, but the pace of innovation will not stop.
right.
And the pace of innovation will push them to try to keep up. Probably they won't, right? But it will push them. And I think this, what we have seen this week, is a first very positive sign that they are actively looking into it, which pushes the industry again, like, okay, we can keep on innovating, we can keep on disrupting and pushing this.
Well, speaking of innovating, we're talking about NFTs, and obviously that's become a buzzword. Everybody's talking about it. I was in California, and there was a bar with a huge sign outside, is how do I make this an NFT? And I didn't know the answer to that.
I can tell you.
But I'd like to talk about what is the advantage of an NFT? Why would you do it?
Well, I think that the main power of NFTs is the authentication. It can authenticate anything from physical asset to digital asset.
Okay, so if you're talking about a physical asset to digital, can you guys hear her in the back? Okay, just want to make sure.
Little
Sorry,
further.
if you could speak up.
Well, the power of, as I said, the power of NFTs is the authentication. And with NFTs, you can authenticate a physical asset or digital asset. And it's basically you giving them a digital certificate of authentication of any asset. And that certificate of authentication lives on the blockchain forever. And it has all the features of blockchain technology, which is the traceability, the ethnicity, the immutability, etc., etc. And I'm not going to go too much into that. And that's the main power of it.
Okay.
But isn't authentication without identity worthless, because I can put NFT of a Warhol on chain, and on chain it will say it's a Warhol, but I'm not Andy Warhol. So you need to be able to link it somehow
Yes, and this
to
is
the
why,
physical.
right, and this is why, if we do like a physical something, basically, that's what I'm advocating for, and this is how I'm working on it in my experiments, is that the smart contract itself is going to make sure that all this documentation, all of the physical persona assets, let's put it this way. If you had the Louvre thing, it's like a museum in France, it has the Mona Lisa, they have all the documentation that they have the original Mona Lisa. So something like that has to be built into the smart contract. The smart contract should say, okay, all of this is really what it's supposed to be. And then you have the authentication foolproof.
And then you create a provenance
Right.
and a transparency.
Exactly.
Right. Well, they're doing that with art, with music,
Right.
and it seems to be that is the forefront with an NFT. But that's bragging. I own this. Blah, blah, you actually own something. Where do you see it going? Like right now, it's in, as I said, in the arts and the music. I mean, somebody just popped by and said, "Oh, is this about NFTs? I'm a musician." So what's the net? Where else is NFTs going?
Well, all the applications in real estate, in patents, in real estate patents, license, any license, marriage license, college degree. I mean, all of that can be NFTs. It's all about the certificate, right? So you can, the way that I imagine it, I might be crazy, but I think at some point in time, you will have a digital wallet with all of those certificates. All of them will be some kind of an NFT or a token. And you have all your information with all of your, whatever is identifying, whether it's a marriage certificate, a driving license, or college degree, or whatever else, and all of that will be it will be very easy to transfer information and share information in a very private and secure way, and that is really, I think, the business use case that eventually going to happen. We're not there yet, but we're getting there.
Have anything you'd like to add?
Yeah, look, I think it's really about this owner's economy, right? Where people have capability to basically own digital art, or whatever is it gaming or fan engagement or
Didn't it all
Solaris,
come from
all-
gaming, really?
All of these things, I think, really the big difference between Web 2 and which is platform-based, Web3, which is NFT kind of is at the heart of it, because you basically own you own it yourself.
Right.
Like if you, let's say you take big platforms like Airbnb, right? It's a very different model than what you see in Web3 with some of the NFT. Right. So the big component here is Web2 with Web3. NFT gives you that capability to basically take share of some of that profit if you want to, and like she said, also it's traceable, right? You can identify it very easily. But also, I think the other component that is really important is if you combine NFTs with DeFi protocols, you can become really powerful, right? Because then you can take, let's say I have a digital art, and I have, say, lots of money in digital art, and then I use it as a collateral on Compound Art or some protocols, and you can borrow against that. Now, people do that these days too. Like if you have expensive paintings and things like that, they probably there's a market for that. But it's not digital, right? So if you have this composability with the DeFi protocols, then I think it opens the whole new space, which is to use all digital this digital asset class and borrow against it.
And there I think the legal framework comes back in, right?
Exactly.
Because if you own art and you can digitize your art, it doesn't have to be native digital art, right?
Exactly.
You can digitize that, and then like start trading that, borrowing against that.
Yeah.
Right.
It can create a history of provenance, credit history
Right.
for that asset itself as well. And then when you sell off that asset, it moves, the token moves with the asset.
Right.
And now people can see like, okay, how much has that asset been valued in the credit
Right.
markets?
Exactly.
And you can start building products on top of that.
Right.
And I think in financial services, we will see there a lot of the democratization of finance. And I know it's an overused word, but it truly is, because a lot of assets are just non-fungible, and you cannot use them in financial markets today. And NFTs will allow us to do that.
Or not just NFTs, just tokenizing
Yeah.
the
Exactly.
liquid assets is a
Right.
big story.
Exactly.
NFTs will get interesting from a regulatory standpoint because it is a synthetic representation of something which is technically a derivative, so there's gonna
Is it
be,
security
yeah,
financial products?
yeah, so there's,
It depends
gets
on the
hairy,
user.
yeah.
Is
it
this,
depends
is this
on the
like
user.
all token, like all NFTs are tokens, but not all tokens are NFTs?
Yes,
Yeah.
yes, exactly that. You've got
It
it.
only took me 6 months to figure it out. But anyway, so we're talking about, I just want to bring in some, a little bit more current events. I sort of mentioned it, what's going on now. And with the view of crypto and digital assets now, especially with what's going on with Ukraine, and how there is that distrust still amongst traditional financial institutions and such, especially, I know a lot of them are very nervous about crypto and digital assets. What can we do, what can we say, and what needs to be done to really gain the trust? Because we're talking about the, changing, from traditional institutions to DeFi. So, I know both Ivan and Joseph, have that financial background.
it's interesting, I just came from another meeting, we were talking about tokenizing some real estate assets, and the revenue stream would be perfect for someone to launder money, and I asked that question, they said, well, no, Joe, actually, the blockchain makes it you'd be very stupid to go on the blockchain and do that, because it'd be very quick, you'd be found out. So I think the industry needs to lobby, and they already are, and needs to do more to educate people on the security of actually the blockchain.
Because it is more
Yeah.
secure.
Yeah.
It is more secure, but I think, the FBI is just a good example of that, they already understand that. They were able to catch those couple, and they've been working with Chainalysis, which is, compliance type of, they do all this blockchain, and they can find, basically trace down all these so-called criminals, or not. And they, in fact, just created a division that they're gonna, just based on that, I guess, they had so many success right now, so they know they can do it. So it is the FBI, it's within the government, so they kind of starting to get it, that it's not that, easy to do whatever crime with crypto.
The money laundering.
Exactly, and the ransomware and the terror and all of that, I mean, they're able to track them very quickly. I mean, the ransomware that we had in June, they tracked them down in less than a week. So.
And again, bringing up this, with some of the threats that have started to come, will this be safer to work with on the blockchain, than, I mean, your thoughts on that?
I think, this whole trust issue around, like there was this article where there was Russia or some anyway sanctions with cryptocurrency. It doesn't look like they can do much with it, right?
Yeah.
Because the fact is, it is traceable, and the fact
Exactly.
is that it is not entirely permissionless from DApp standpoint. I mean, exchanges like FTX, Binance, they can impose these compliance rules, KYC, and so KYC or AML, right? It's their obligation to implement these rules, and once you kind of implement these rules, it's easy to kind of spot any illegal activity. So I think this issue of trust is really about just making sure things are regulated, you apply the rules, you're good, right?
Yeah.
I think the part that is less strict, that is more tricky is DeFi, because DeFi is entirely permissionless right now. So it might be, there could be instances where you have some money laundering there, right? I mean, because it's so permissionless, who's gonna deal with that aspect, right? And how are you going to deal with that aspect? Will it be some form of permission type of solution, right? So like right now on the institutional side, we already see some of these permission pools, right? Where Aave is designing permission pools, institutional pools for investors who have these concerns about DeFi not being able to control some of that, right? So I think this idea of blockchain being completely permissionless, it's a little bit of fantasy. I mean, from a design standpoint, it is permissionless, but I think, dApps, they can still impose these rules and make it permissioned in a way, from a sanction standpoint.
But I, to your point about permissionless, I mean, basically the smart contract, now, some of them are not so smart, but it can be smart. It's all about how, what you write, how you code it, and what rules you put in. It's possible, and I'm telling you because I'm working on it, it's possible to create this type of compliance on-chain and off-chain. And the combination of the off-chain and the on-chain and the off-chain in real time, I think will be, as people would see that, of course, after, it's going to be approved. And with the collaboration, hopefully, of the regulators, they will be able to monitor and see that it's working. That's the idea, to bring them to the table. I think that people will gain the trust. I'm not saying it's going to happen in a day, but that's all there.
So, but I was referring to the concept of permissionless, that you cannot limit anybody to kind of.
It could be permissionless, and still you can have the on-chain and the off-chain monitoring with permissionless.
Did you want to add something?
Yeah, I think it's a system can be fully permissionless there, but indeed, like you need the regulations to go with it. Like I think we with Credit we're also building permissioned pools. Why do we do that? Because an institution just by regulation needs to know who the counterparty is. You cannot do that in a fully permissionless system. You can indeed build AML and tracking and things on a permissionless basis. I think that's definitely true. But beyond everything AML, I think we also need to be looking at our industry and say like the trust issue is also because there are still a lot of scams. There are still a lot of misalignments. There are still a lot of hacks. The fact that there are founders and they issue tokens, they have like 1 year lockups and then it vests in a year and then they get out, they take the money. There is no incentivization to build for 10 years on a product that is really valuable and that scales. And I think as an industry, it's our responsibility to sit together around that, bring the right people together and really build for the long term and then work with the regulators, think about what is needed. And I think that is what will bring the trust in the long term.
I think the big thing will be custody. From a regulatory standpoint, if crypto is ever going to be accepted as an asset class, either for retail investors or institutional investors, they need to be convinced that their assets are safe and not going to be hacked. And right now, there's a lot of stuff still out there on hot storage, and that's the controls aren't in place in a lot of places. I don't think people understand that. So.
Yeah, and cold storage is like, you can do cold storage, but that's not the innovation we need, right?
Exactly.
Innovation that you put it on a ledger and then you go to a bank and you buy a vault to put it in, that's not the innovation that we're signing up for, right?
No, it's,
So
you have to do some sort of intraday clearing. So.
But it's going to be a process. The internet that we had in 2000 is not the internet that we have today. So people
Or
are
the
expecting.
internet that's going to be in 10 years.
Exactly. So everyone is expecting the blockchain to be as if the internet of today, when we are basically technically like 2000 of the internet. So it will take time. The industry will mature. The regulators are going to come in and work with the industry. I hope that this is the only way that we're going to really move forward and really make this innovation happening. Because with the collaboration of the regulators, we need that. We don't need enforcement.
And there, I think, to your former point, I think 2 years ago, like Ethereum was the only thing we knew, right? Like if you see the pace of innovation, like you said, like with Algorand, with Solana, with all the other L1s, we now have L2s, we have DeFi. Like 1.5 years ago, we weren't talking about DeFi.
Exactly.
We were not, we didn't know about smart contracts that were doing liquidation. So indeed, the pace of innovation that we will see, like, go beyond our imagination.
Right.
I'd like to wrap up our part of the discussion by talking about talking about growth areas and investment areas. So if you were going to invest in a company in this area, what type of companies would you look to? And who'd like to, besides your own? Jeff?
You know, certainly there's mining industry, there's huge opportunities from an arbitrage perspective, and tokenization I think is still a great area to be in, but we were just talking about this earlier actually. It's great you can tokenize stuff, but you need to be able to distribute it. That I think a lot of people in the industry don't think long enough about the distribution component of things. And again, custody, to invest in someone that does custody well, where your assets are safe kept, and you'll get big institutions to consider crypto an asset class, that will be a big game changer. So.
Yeah, I would double down on like the financial market infrastructures in this world of DeFi. I think there are a lot of companies that a lot of people don't know about, like a Swift, like a DTCC, like a Euroclear. Each are huge companies settling billions and trillions of dollars, making big revenue, big spreads, big margins on that. And we will need that same kind of infrastructure in a DeFi world. And it's not there yet. And I think the opportunity in DeFi is even bigger because you don't have to think locally, you can think globally from the beginning. You don't need to build a DeFi protocol for the US and another one for the EU. You build a DeFi protocol for the world. And I think that is where we will see a lot of growth.
Yeah, I mean, there's certainly, I kind of think about definitely from an infrastructure standpoint, that's like one place that you see lots of opportunity. Like one example is like, if you think this is a multi-chain road, which I think it is, although my view is you are going to have one major settlement layer, like that's my view, right? Ethereum potentially, and then you're going to have multi-chain road. So any sort of investments related to the infrastructure or connecting, whether it's a bridge or whether it's like you got bridges like Connex Bridge or some other bridge, right? I think it's a huge thing, right? Because that cross-chain activity is going to be important, and then any infrastructure related to that will be really, really important, right? The second, I think, opportunity is really within the just the DeFi markets, the markets components in general. You know, it's like you go on Curve or some of these protocols, they're not that, you know, it's like user friendly, right? Where's my pool? Where's my, it's like you look for the stuff, it's like, what is this for, right? So the technology is there, but it's like the user interface is not really at the level where it needs to be. So you have that component, like just user interface, solutions around integrating DeFi protocols, primitives, right? Because you can think about DeFi, there are primitives like lending, compound Nave, there is market making like a Uniswap, but that's primitive way. And then on top of that, there's still plenty of opportunity to build solutions that integrate it in a much more comprehensive way, right? And that could be a huge, that's a huge task, and it's I think there is a lot of opportunity to invest there. And finally, I think any opportunity that I would say some really basic stuff like staking. Think about staking. Like staking can be a new form of government investing. Like just like people invest in U.S. treasuries, you know, you have yield curve, you park your money, and then I think staking on some of these major protocols is no different than once they mature and get to a certain size. It's like a form of bond investing. So any infrastructure that kind of facilitates that staking, you know, where you know your 401k can be staking things. You know? So that's going to be a huge, I think, area of investments.
Am I wrong?
Well, I mean, I think, just, think about it, because it is global, because it can basically touch any type of industry and business that and anything that we do today, the possibilities are, I like to say, boundless. In whatever we're going to apply, and not to mention that eventually we're going to go to the metaverse, which is going to happen one day, and then all these interactions between the physical world and the virtual world. If you think about it, just think about going to collateralize a virtual parcel in Decentraland that you can then use for, let's say, DeFi, or use it even for the traditional manner. So all of this, take your imagination and think about all these possibilities that could happen. And I know that there are already projects that are thinking about it and working on it. But again, in order for that to really become a reality and not a fantasy, we need scalability, we need interoperability, and we need compliance. And if we don't have that, this will stay a fantasy. And I do see, what I'm optimistic about, because I do see projects that are working on interoperability and are working on scalability and are working on those solutions in order to make it happen. But without that, it's just going to be like a good story.
Well, thank you. I'd like to open up, and does anyone have any questions? No, we answered everything? Okay.
Actually, I came late, so I missed most of the panel. So my basic question is, what would it take for institutions to adopt DeFi? I think this was very good discussion as well.
Yeah, I think summarized, I think regulation is one of the big key ones. Getting the right infrastructure in place around custody, around liquidity into the markets, and getting to a certain scale where it becomes interesting for them to play around with. Because like earlier this day, I was sitting together with some bankers, and they were telling me, like, look, we are buying Bitcoin for our clients. We are buying Ethereum for our clients. We do it directly. Like, we take the custody of that. We just don't advertise it. But if they really want it, we will do it for them. But it's not yet a business opportunity for them, because the regulation, the infrastructure, and the scale is not in place yet.
Mm-hmm.
And I think that are two things.
And that's exactly what we say.
Yeah.
Without it, it's not going to work.
Well, that's right, here.
Hi, first of all, thank you for doing this, and it's very informative, thank you. And I think it was touched upon, the U.S. government still hasn't regulated Web 2.0, and I think they're still trying to figure it out. So, isn't that more of an obstacle right now? If they're, it's kind of worried me that all of a sudden the current administration is coming out with, how are we going to regulate this industry? Now, do you think that's more of an obstacle right now for the growth of all these projects, or is it? Because I do agree we do need regulation, but how do you see is the best way to do that? Because the government really, historically, is more of an obstacle than an expansion.
Well, the U.S. now came up with this executive order, but you have to understand that other countries are already been coming up with proposals already. The U.S. is kind of behind when it comes to really starting to think about regulation. The UK already came up with proposals, the EU came up with proposals, Singapore, Australia, so it's all around Japan. I can go on and on. There are many countries already been thinking about it before the U.S. The U.S. is a bit behind. So it's a matter of time that it's going to be regulated. Though we hope that the regulation will be a regulation that's going to work with the industry to understand the innovation and make sure that this innovation is, the regulation and the innovation are working together and not, one against the other. But it has to happen.
Well, I have 3 questions. They're linked.
You only get one.
Okay. Well, it's
Choose wisely.
I know, exactly.
Okay, perfect then. Well, I'll turn to the regulation thing. Do you think countries will eventually make their own money into the crypto market, for example? I don't know, crypto peso, crypto dollar, crypto whatever.
It's happening.
I think,
It's
yeah,
happening right now.
the
The
digital
crypto
dollar.
yuan.
Yeah,
But
it's happening right now.
would it eventually lead to a local regulation? I mean, because you were talking about a global regulation, but I think with every country doing their own crypto money, when it eventually lead to a local regulation.
Wouldn't it be, I'm just gonna add on that,
Yeah.
but wouldn't that be almost a form of a stable coin?
Yeah,
Yeah.
and I think actually stable coins are something that pushes regulators to think about this wisely.
Exactly.
Because if you're the US and you see that USDC, this stable coin, is getting like 70, 100 billion
Mhm.
TV, like now you can, in this new digital world, by regulating this wisely, make it a new de facto currency.
Mhm.
That is what you want. You don't necessarily need a CBDC because people don't care if it's issued by the bank or held into
Exactly.
a commercial bank account. But it actually pushes them to say like, okay, this can be used and we recognize it and we license it and we manage that there is a good one-on-one with the fiat that we keep and the stable coin that there is. And that brings a massive amount of trust in the
Exactly.
system.
Exactly.
Because I think those stable coins were really like the beginning of the push of the growth of DeFi, right? And it's what I think will push again for the next generation.
Yeah. In fact, there are people in the Fed that are advocating for stablecoins and not CBDC.
Yeah.
So
Yeah.
that's, who knows? I mean, maybe the US eventually will end up with a good, stablecoin, which is not a bad idea.
There's also something a little sinister about the whole thing as well. I mean, the Chinese government is not just doing it to bring finance ahead, it's also so they can monitor what people own and what they're doing with their money, so.
Yeah, I mean, yeah, perfect. Thank you very much, guys.
Yeah,
Yes.
so, you spoke about NFTs a bit, and as you know, everyone's buying sort of like digital art, right? But there's so many other use cases with music and stuff. So I specifically work in supply chain, and as you guys know, the global supply chain's a bit strained, right? And so my question is, like, how do you see sort of, whether it's crypto or like NFTs, like solving for some of the supply chain issues that we're currently seeing and experiencing?
I think there's a use case with, there are a few use cases of experiments of what's happening with supply chain and the blockchain. There is one, I think Walmart did a couple with food about, I don't know, maybe a couple of years ago, before the pandemic,
Yes.
and which was very successful. They were able to track down in a matter of seconds, where like usually, when there's food that is contaminated, they usually go and burn everything. And instead of doing that, because everything was tracked on the blockchain, they were able to track it down in seven seconds. So that just tells you how we can apply blockchain to supply chain. And this is just one. I can talk about a few more, but we don't have time. So.
I think in general, like, what is the issue of supply chain is like there is a lot of friction in it. Why is it? Because it's paper heavy and it's intermediary heavy.
Right.
Like we can now digitize on the blockchain by tokenization. Like digitizing, we could also do in Web 2. But now we can transfer value with provenance on the blockchain,
Right.
which we couldn't do in Web 2. And I think that is where we then can disintermediate. And that could then create the efficiency that we would like to see into supply chain.
Yes.
Again, I appreciate the cozy environment for the discussion and enjoying a lot. I noticed there's one word missing from this tonight, is the word DAO. So it's a it's a big word, but people talk about NFT, but I want to talk about DAO for a second. So in DeFi world, this year in Denver, people MakerDAO talking about how they decentralize their organization, right? So when we talk about a lot of compliance, a lot of how the regulation applies to those, people are talking about real decentralized. So an organization no longer is a centralized organization, they become DAO.
Right.
So my question is, do you guys envision this become a new form
Yes.
of C Corp?
Yes.
You know what I
Yes,
mean?
yes, yes. Let him
I
finish
love
his
that, I
sentence.
love that. For example, the corporate or LLC is a new concept, right? It didn't happen until like a few hundred years ago. So do you guys envision DAO become a new form, like coexist or even replace the current way of organizing company, right?
Yeah, I mean, Wyoming is the first, state to basically legalize it. So, and they're always like in the forefront of any innovation. Yeah, I can see that, of course, we had some hiccups with that. Like, the particle came out, weren't that successful, so I understand why there's skepticism and a lot of criticism about that, but it doesn't mean it cannot work. So hopefully we're gonna try, work on it, but I think the concept itself, it's gonna happen. And I think even remember that I mentioned the JP Morgan with the paper about that, they in fact mentioned that a lot of DeFi's will be governed by a DAO. This is their vision. So I'm not the only one who's thinking this way. Yes, the ones that we had lately weren't, the gold star. But
I'm a bit more skeptical, I think. I believe corporate governance has to change and maybe be more transparent, but I'm not sure if it has to be decentralized. And also I think it's fine to say you're a DAO, but if in the end 10% of the tokens are still with one big fund and they vote, why are you putting this into a DAO, right? Is it just to push your valuation? So I think we should start from rethinking corporate governance and then think okay, how can the technology help us instead of starting from the technology aspect.
exactly.
We'll take one more question.
So, to me, the biggest hurdle to get mass adoption in crypto is this idea of trying to tell people all of your information's on this little wallet, and then if you lose that wallet or you don't remember your catchphrase, it's gone. Trying to get my family to try to adopt some things like you could earn 19.5% on UST right now in the protocol, so easy. But when you start getting into you need to get a wallet and do all that, I kind of lose them and they get a little scared. So how do we get people is there any type of innovation going on, how you keep the security of the blockchain but allow people to maybe recover a password or go in that direction?
Yes, definitely.
Yeah, look, I think I'm scared too, I check my wallet every day. But I would say it's not as scary as it's a question of getting used to some, it's a pretty safe stuff right now. Cold storage right now is a little bit outdated for crypto, I think there are some really sophisticated custodians right now, like Fireblocks, who have done excellent job with NPC technology. It's tough. I think the custody problem is solved. You do have to be disciplined in how you're managing your wallet, right? But I think the custody is there, and it's not really. It's a question of being very, very disciplined around some of these things. But it does take time to. It took me a lot of time to get used to. I'm not sure if there is a very easy answer to that, but I would say that the custody problem is kind of solved in crypto space, right? With NPC technology and all these things, it's out there.
Jeff?
I think where it's headed is you really shouldn't have your own wallet. In the traditional world, if you don't choose Apple, you keep them at Charles Schwab or you keep them at Fidelity, and the institutions at some point will be doing custody, right? And there probably, you mentioned DTCC, at some point there will be a crypto sub-custodian, DTCC, that clears everything for Fidelity, for Schwab, and that's when the big boys will be in the industry. Yeah, the wallet thing's, it's tough. That's probably not the way to, that's where I think the industry's headed.
But the nice thing is that with blockchain, you can choose. You can choose, if you don't trust DTCC, you don't trust your bank, you can hold the assets yourself, right? And then other persons might say like, look, I believe in these assets, but I
Yeah.
don't really care about like doing myself
Yeah.
custody. And I think that's a big difference.
Right.
And then at the same time, like I was just speaking to some teams last week, and what they were doing is like they're trying to link your private key to biometrics or to a
Right,
set of
exactly.
pictures. So there are a lot of smart people coming in the industry, and they will solve.
Yeah, so I, to your point, I mean, I can see already projects that are working on solutions that will, that all this idea that, oh, I lost, you know, that special sauce, let's say, you know, I hid it somewhere in my, you know, drawer or whatever, they're coming up with solutions that, you know, we're just mentioning here to make it more, you know, easy and intuitive for people to use and not feel like, oh God, you know, I don't wanna get into that because I don't know what will happen to me and I'm probably gonna lose it. So I can see that, but the solutions are coming. I mean, we have to be patient, please, give them some patience.
Not a virtue, I suppose. Well, anyway, first off, I'd like to thank our panel for tonight.